Hi, and welcome back. As you can see, not a whole lot's happening today. I am down pretty big over the last week. If we go ahead and take a look at the last week, I am down $68, just over 2%. Put another $50 in my account this week, which means I'm in for a total of $3,100 all time. As you can see, that means I'm down just under $100 or 3.22%. Not good at all. I've talked about it in the past. I would like to get this turned around as soon as possible, but I am optimistic, and I think that being somebody who's in college and investing now, even if this doesn't look great in the short term, I think in the long term it will look a lot better and I will be successful. I've talked about it before, but a lot of this has to do with Bitcoin, and I will cover Bitcoin a little bit this week, but I will not talk about it a whole lot. I seem to talk about it just about every week because it is such a big part of my portfolio. So for this week, I bought one more share of SPHD, rounding it out to 10 shares for just about $430. As you can see, equity $428.80, up a little bit on this all time, not much at all. But again, I've just started buying this within the last couple months. It is kind of my bread and butter. It's going to follow the S&P 500 pretty closely. Has underperformed the S&P 500 actually this year. Not looking spectacular, but again, I am optimistic, and the monthly dividend on this is huge. Being that I bought that one share today, it will not count towards the dividend that's going to pay next week. So I'm only going to receive 9 shares there at 15.47 cents a piece, so $1.39 on that dividend. In the future, I'll go over kind of the dividends that I've received weekly, monthly, yearly, what basically my portfolio is focusing on. And I have a spreadsheet that has shown all of those dividends. The next one that I kind of want to talk about is Vivint Solar. Good day on that one. I've covered this a ton. I am down a little bit on that all time, but it is looking a lot better. If we go ahead and look at the last 3 months, it looks horrible. But if we look at the last year, it makes a little bit more sense. Had that huge uptick starting in December of last year, basically with everything else. But then we peaked here around August. They had an earnings call that didn't go spectacular. But as I covered last week, that earnings call, the latest earnings call here in November did go a little bit better than some people had expected, even though they missed their earnings expectations. And that's going to be a keeper for me. I think I'm going to go ahead and hold steady on that one for now, but we'll see for the future. Pfizer's another one I've been talking about lately. They are kind of returning to the price that we saw earlier in the year, as we can see down $10 on that one all time. But definitely a stock that I want to continue to buy for a couple of reasons. The biggest one on Pfizer right now is going to be that it's oversold, and it's still not anywhere near the peak of where it's been in the past and where a lot of people think it will be. And the second reason is that Pfizer is paying a decent dividend right now, and they have fairly consistently increased that dividend. And as a portfolio that focuses on those dividends, I think that's a really key aspect to look at. And so I've shown this before, but we'll go ahead and take a look at it again. So in November of last year, they were up as high as $46. So Pfizer being at $38 right now is a pretty good buy, and definitely something I'm looking at. Now, the biggest thing that happened this week, whether or not you've heard about it, may depend on kind of how closely you're in touch with the market news, and that has to do with Charles Schwab talking about buying TD Ameritrade. And I've got an article pulled up about why this is such a big deal, but really what it comes down to is that these are two of the largest players in portfolios, really globally, and combined they hold about $5 trillion in assets. Charles Schwab is still finalizing the deal. TD Ameritrade is finalizing the deal with them, and pending government approval, this could be enormous. So up $10 on this all time. If we go ahead and look at the last week, you'll see when this kicked in. So up almost 9% on the week. That's huge. This is a stock that I wish I would have bought more of, clearly, as hindsight is 2020. But I think I will go ahead and continue to buy Charles Schwab in the future. A, because it's a fairly affordable stock. It's not super expensive. And B, if this goes through, it could be absolutely enormous. They would be probably the largest player in the world in terms of individual stock portfolios. And you can really see the difference that this has made. So over the last year, they've been trending downward. But between their decision to remove all trading fees, kind of following in Robinhood's footsteps, In this latest news of their proposed acquisition of TD Ameritrade, it's looking a lot better. So over 5 years, we can see that even starting since the beginning of 2018, they've been kind of in a downward trend, topping out around $60. So 48 right now is a decent price for them. I've done some research into what experts think, and nobody is really saying that $60 is likely within even the next 6 months. However, this is a stock that I want to continue buying. I say that about a lot of my stocks, but I think part of that is the bias of me wanting those stocks to do well. And part of it is that I do try to do as much research as possible to make informed decisions and good decisions. So here we have the article saying that the market itself would love this trade. So as we can see, the agreement right now tentatively is for $28 billion. That could change. There's a lot of things that are still left to happen. The government could, of course, at any point say that would result in a monopoly and that they wouldn't support it, kiboshing the deal. But again, this could take months, if not years, to finalize, so we'll just have to wait and see. And here we see what I've talked about before. So $5 trillion in assets between the two, and that is incredible if you really think about it. 12.2 million brokerage accounts. So Charles Schwab is the largest custodian for registered investment advisors, and that's an important note. Charles Schwab is so big, so even a company like TD Ameritrade, which is a huge company, as we can see down here, $1.3 trillion in assets, they already outpace that by a lot, and it would create an enormous market for them specifically. I've read through all of this, and basically it just kind of covers the same things that I've talked about in the last few minutes, which is that between what the industry's done, Charles Schwab's not failures, but kind of shortcomings in the past couple of years, their struggles, this really could be a change of the tides for them and make a big deal in the long run. So it's definitely something to continue watching and something that I will be watching in the coming weeks and coming months. So I would definitely recommend staying informed on that. Down here we've got a couple of shares that haven't done a whole lot. Nintendo, down on the day quite a bit, but I'm not super concerned about that. Especially with these smaller holdings that I have, I'm not super concerned with any of them. KeyBank is one that I do want to go ahead and take a look at because it is one of my newest purchases. And as you can see, almost no return on that so far. But I have read the analyses, and people think that this is a company, a bank, a share that could succeed both now and in the long run. And so that's something that I want to continue to keep my eyes on. I've showed this in the past couple weeks, so they're up past year. Past 5 years, they're up quite a bit. And again, investing $50 a week, this is a great stock for me. I can buy 2 shares to possibly 3 shares, depending on what I want to do. And the rest of that money, the past couple weeks, has gone into Bitcoin. I cover it every single week, but I do think it's important just because I put so much money into it. So as you can see, cost of $565. So the total return being minus 160 on there. I do like to look at that because even though it does show that my Bitcoin purchases have not gone well for me, it does show that this more than buries the gains that I have from my stocks. So I'm down just about $100 all time in my portfolio, which means that, with this minus 160, I'm really about plus 60 on my stocks, which is about 2%. And considering that my portfolio is less than a year old, and most of that money hasn't had even, say, half a year to be in the market, I will take 2%, and I don't think that that's anything to be ashamed of. The big thing here is over the last week, Bitcoin has really been hammered, so down about 15%. The more I do research, the more I'm convinced that this isn't anything to be worried about. But the way I see it, go ahead and tune in every week because I'm either going to be very right or very wrong. And I think it'll be entertaining whether or not I do lose a lot of money or make a lot of money. As pessimistic as that sounds, I think that it is important to be transparent about that. Down 28% in the last 3 months. Nothing new there. It is what it is. So we'll go ahead and pan out as I always do. We'll show all time here, down just about 3% on that over the last month. I think this gives a pretty good indication after that last Bitcoin spike. I have been down from there. But as I always say, Make sure to stick around next week. I will be back a week from today. Make sure to like and subscribe. Thank you.